main stimulus for Thailand's economic development when it comes to real estate, I think you have to look at demand as the number one factor. And demand is influenced by many, many factors. But among the most critical is really liquidity. So when people have cash or feel wealthy, they tend to buy property anywhere in the world, and Thailand's no exception. The second great source of demand is investment from overseas, or FDI. And although Thailand has had some bumps in the road, shall we say, things have not been always that smooth, it's amazing how resilient that market is. You just have to look at the Eastern Seaboard to see how much Japanese and other Asian and European and American investment is going into the manufacturing sector to understand how strong that demand is. Thailand has always been a very Bangkok-centric economy. Just look at it, about 20% of the population live within 20-30 miles of Bangkok CBD. So when it comes to the development of the secondary cities, things have been slow, to be honest. And in the past, most of that secondary city demand has been predicated on tourism demand. So of course the major tourist centres like Phuket, Pattaya, Hua Hin, and also Chiang Mai, Samui, have done well on the back of that tourist demand, but not really local demand. More recently, some of those cities, especially Pattaya and Hua Hin, have developed a stronger local demand base. But what's even more interesting is the development of what we could call second-tier cities, such as Khon Kaen, Korat, Udon in the northeast, and various other cities around the country. And what we're seeing here is not foreign demand, but local demand as wealth spreads out, as those economies develop. Hua Hin ranks very well as a value proposition, I think, although land prices have gone up quite a lot. I mean, for some people are now unable to afford to buy in that market because, especially beachfront land, we've seen escalate quite remarkably. But value for money, it's still very affordable in terms of if you're buying a condo, if you're buying a house in the hills. And it's not just Hua Hin. We talk about Hua Hin, which actually captures a much wider area. The other area that's becoming very hot, I'd say, is Cha Am, which is nearer to Bangkok and has some very, very good developments, and also becoming very attractive as a value proposition compared to Hua Hin. In terms of Myanmar, how it's progressing as an economy, is it overheating? It's a tricky one. I would say no, frankly, and especially from a property point of view. And my logic is that in order to be overheating, you have to have a market that has a lot of supply coming on stream. We don't. Myanmar is still very, very nascent. In the office sector, which everyone focuses on and talks about these super high rents. And it's true, rents are 75, 80, 85, sometimes $90 per square meter per month, which is, you know, Singapore levels or higher, 3 to 4 times what you pay in Bangkok. So it's not cheap. But a couple of caveats to that. First of all, when we look at those office rents, we're looking at maybe 3 or 4 office buildings, total space perhaps 60, 70,000 square meters, compared to a Bangkok market where you have total supply of 8 million square meters. So of course rents are going to go up because there's no supply. Now if you're very desperate for space and can't afford those kind of rents, then there are alternatives. There are shop houses, there are standalone villas, there's other kind of serviced accommodation. So you can get cheaper space. It's a myth to say that you can't. So is it overheating? I think until we see substantial amounts of new supply coming online, it can't really be called overheating. Now, is it overpriced? That's another story.